Hi everyone, welcome back to the USCPA classes for Financial Accounting and Reporting. In this particular video, I'll be walking you through on ASC 842, that is lease accounting. Yes, and in this lease accounting, we have a series of video lecture will be coming just after this. So this is part 1 of ASC 842. In this video, I'll be giving you the complete overview of ASC 842 lease accounting, and specifically we'll be covering in detail about what is in scope, what is not in scope, how to determine the lease measurement, and the lease contract component, right? So let's dive into to understand more in detail.
Today we are going to start ASC 842, which is lease accounting standard. So earlier it was ASC 840, but in 2019 the new accounting standard codification has been done, which is ASC 842, which has replaced the ASC 840. So ASC 842 is primarily and only for the lease accounting, lease of property, plant and equipment. If there is any other thing on lease other than property, plant and equipment, that should not be part of ASC 842. For that, there would be specific accounting standard codification. So what we need to consider in ASC 842 is the property, plant and equipment on the leasing arrangement, right? So here in this entire ASC 842, we'll be understanding three major things. First one is accounting of lease and the guidance required for that. Second, sale and leaseback transaction. That's a special category of transaction we'll be understanding. And third, there are certain miscellaneous topics like contract combination, similar to how we studied in ASC 606 also, right? Short-term leases, subleases, lease on easement, and then impact of lease on financial position, comprehensive income, and cash flow statement. So those all things we'll be understanding in detail. So first, we are jumping onto the lease accounting and guidance. So lease accounting and guidance, here will be, this is again like complete overview of lease accounting and guidance. We'll be studying one by one each things in detail, right? So first thing is what is in scope of lease and what is out of scope of lease. In scope of lease, which we have already discussed, is the property, plant and equipment only, right? So there might be some time you get a question and you may get confused whether it should be part of ASC 842 or not, but it's been clearly mentioned in the standard what all things are out of scope. First one is intangible assets. What are intangible assets? What are intangible assets? Are you guys with me?
So like goodwill or your patents.
Sir, goodwill,
Good.
patent,
Patent,
trademark,
trademark, right? Those all are intangible assets. Those are not covered in ASC 842. Mineral oils, natural gas, similar non-regeneration assets, those are also not covered. Biological assets, including timber, or you can say your horses, cattle, those are also not included in ASC 842. Inventory is not included. Assets under constructions are also not included. So those all things are completely clearly mentioned as out of scope, right? Because for them, they are specific accounting standard codification. These are covered in another specific ASC. That's the reason these are out of the scope of ASC 842. Then another concept, or you can say the first concept we'll be understanding in the lease accounting and guidance is the determination of the lease, whether an arrangement is a lease arrangement or not. And if it is a lease arrangement, then whether it's a short-term lease or a long-term lease, is it a finance lease or an operating lease, it's a sales type lease, direct finance lease or operating lease, all those things we'll be understanding in detail. So first and foremost concept which we'll be understanding in detail today is the determination of lease. So we'll be investing good amount of time in understanding the determination of lease. Then after, once you understand an arrangement, an agreement is a lease agreement, then second thing we'll be understanding is the classification of lease. So when there is a lease, so there are two parties involved in it. One, who is receiving the asset, the one who is giving the asset, right? The person who is receiving the asset is called leasee, and the person who is providing the asset is called lessor, right? Person who is providing the asset is called lessor, and person who is receiving the asset is called leasee, right?
Less.
Lessee. So in both the books earlier, if you see like your Indian accounting standard or maybe like other accounting standard which you might have studied, in your college days or in your professional study days about finance lease and operating lease, right? But there's a new concept which is like different in the IFRS and US GAAP than from the Indian accounting standard is sales type lease. So leasee will be considering either an lease arrangement to be a finance lease or to be an operating lease. So we'll be understanding in detail about the concept of finance lease. What are the criteria? If those criteria are meeting, then that asset would be considered as a finance lease, right? If those criteria are not meeting, then it will be considered as operating lease. So operating lease consideration or classification is a residual, right? First, we need to check whether the lease arrangement is a finance lease or not. If it is not a finance lease, then it will automatically come under the operating lease. Same way, if you remember in ASC 606, we discussed about revenue recognition criteria. First, we understood about over the period of time. So there were certain criteria. If those criteria were met, then we were considering the revenue to be recognized over the period of time. If none of those criteria are meeting, then the revenue was recognized as a point in time. Same concept here also. First, we'll be trying to understand and identify whether the lease is a finance lease. If it is not a finance lease, then it will automatically jump into the operating lease classification. Make sense? Yes, no?
Yes, sir.
Hmm.
Yes, sir.
Now, but in the books of lesser, who is lesser?
Giving the asset.
Yes, the person who is providing his or her asset, right? So in the lesser book, there are three categories. First one is sales type lease, second is direct finance lease, and third is operating lease. So there are certain criteria which for the lessee we consider as a finance lease. The same criteria applies, then it is considered as a sales type lease. And if there are certain additional criteria, if like none of those five criteria are met, then it is not a sales type lease. But there are two criteria. If those two criteria together meet, then that lease would be considered as a direct finance lease. So we'll be discussing in detail all those criteria. And the last one is the residual, which is operating lease. If from the lesser standpoint of view, if it is not a sales type lease, then you need to evaluate whether it's a direct finance lease. If it is neither a sales type lease nor a direct finance lease, then it will be classified as an operating lease. Right? We'll be understanding in detail all those criteria, but just high level, I'm giving you overview what is expected in these topics. Then after
But
we'll be
sorry to interrupt. Just one question. This ASC is also in line with IFRS, right?
yes, IFRS 16.
Okay. Okay.
Hmm.
Thank you.
Yeah. So only like IFRS and ASC are very much aligned, but like Indian accounting standard, there's a no concept of sales type lease. So that is something new.
Right. Okay, sir.
Next topic we'll be understanding is the lease measurement. So today we'll be trying to cover determination of lease and the classification of lease, and tomorrow we'll be jumping on the lease measurement. So lease measurement, we'll be understanding few concepts. First one is lease term. So what is the period of a lease would be considered? So whether it's a month on month, it's a quarter on quarter, semi-annual, or it's annual or year over year, or maybe of 3 year, 5 year, 10 year, long term, short term. How do you identify the term from looking at the lease agreement? Second is, like there may be a possibility your agreement looks like it's being for like 2 year or 3 year, But if you look at certain specific term, it will say like renew month on month, or it may be like short term, it may be day by day basis also. So it just not just like the how much is the tenure in the agreement which we have agreed, but what other things you need to consider to identify the lease term. So that will be understanding. The next concept is lease liability. So here in the finance lease, sales type lease, or direct finance lease, right? And all such things, and even in the now in the operating lease also, it's required to calculate lease liability and right to use asset by the lessee. So how you need to calculate the lease liability? So lease liability is basically the present value of the future payments, which is now which you need to pay under the lease agreement. So that is your lease liability. We'll be discussing that concept also in detail. The next one is right to use asset. So we'll be using short-term ROU, right? Just remember it is right to use asset. So how do you calculate the right to use asset? Because if you are taking any asset on lease, that means company is giving you the right to use that asset, right? And that you need to capitalize. How you need to capitalize is based on how much payments you have already made, how much payment you are currently making, and how much payments in future you are making, the present value of those, and any guaranteed residual value, right? So the present value of all those things would be calculated and summed together to consider as the value of right to use asset. That also we'll be discussing in detail, and we'll do some practical question also for that. Next, we'll be understanding fixed lease payment. So there might be a lease arrangement which is like variable, or there might be a lease arrangement which is fixed. Like generally, if you have seen like for your office building, so there may be like 3-year, 5-year, or 9-year contract, right? So in which if you see, there might be two things possible. One is fixed component, one is variable component. Fixed component would be like the month on month rent, and then variable would be like every year there would be an increment of 8%, 10%, 15%, whatever like is being agreed between these two parties, right? And if you see like other side, variable agreement, if I say, there are like machinery if you take on lease. Sometime, if you see like big construction company, they hire JCB machine, they take like big JCB, or you can say mixture machine on lease, right? So those comes on a usage basis, how much you will be using it, how much miles you'll be using it, how much mixture you'll be making it, right? So that is called variable lease, because in that the payment is not fixed, but payment is variable based on the usage. Same way, like in US, the car leasing is very much common and famous, right? By any chance, any of you have been to US, or any idea like how this leasing arrangement works over there?
No, sir.
But have you heard about car leasing arrangement?
सर मतलब सुना है बट डिटेल में नो आइडिया.
सर फोन्स में भी आएगा सर, ऐसे ही होता है.
Yes, phones also. Gurmihar or maybe Rahul, do you have any idea?
No, sir.
Prashant, you are saying something?
Sir, I guess they will have to.
Kashish, yes.
Sir, I guess they will have to recharge it on a monthly basis, and plus, the prepayment as well has been done as well. So
No,
these are on a monthly.
no, I'll tell you like how it happened. Like generally when you go to the country like US, so there are you can take cars on lease, right? It can be like for a 1 day, or it can be for a week, it can be for a month, or it can be month on month, or it can be over the period of 2 years or 3 years, right? Generally, most of the time, like in US, people take car on lease for 2 year or 3 years, right? How this arrangement has happened, like if you are using up to 1,000 miles, so you need to pay, let's say, $500 a month. If you are using 1,000 to 1,500 mile, then you need to pay $700 as a lease rent. If you are using like more than 1,500 miles, you need to pay $1,000 a month as a lease. So it's a use basis, lease rental they charge from the customer, because they see like it depends on number of miles the car would be running, the depreciation will be move accordingly, and the value of the car will go down based on the number of miles it is on it. Right? Make sense?
Yes, I got it.
Next concept is sorry. Next concept is residual value. Have you heard about this term before? Residual value.
Yes, sir.
Any example you would like to share?
Sir, example to as such, I know the concept that residual value is basically एक होती है guaranteed, एक होती है unguaranteed. So I know that जब कोई भी asset lease पे देते हैं तो lessor expects कि लीज टर्म के एंड में आई एम एक्सपेक्टिंग कि ये जब एसेट मेरे पास वापस आएगा आई विल बी एबल टू सेल इट ऑफ इन दिस मच वैल्यू और फेयर मार्केट वैल्यू ऑफ दिस एसेट वुड बी दिस मच अमाउंट. सो दैट इज रेजिडुअल वैल्यू. एंड अब इसमें दो बाइफर्केशन होते हैं, जैसे मैंने बोला गारंटीड एंड अनगारंटीड. गारंटीड वो है जो कि लेसर इज एक्सपेक्टिंग फ्रॉम द लेसी कि तुम एसेट इतना मेंटेन करके रखोगे कि इतनी तो मेरे को गारंटीड मिलेगी ही. एंड अनगारंटीड होगी कि जो गारंटीड के भी ऊपर वैल्यू अगर मिल जाए, दैट इज अनगारंटीड वैल्यू एंड वी टेक दैट आल्सो इनटू कंसीडरेशन व्हाइल कैलकुलेटिंग द लीज.
Yeah, partly right, partly not. Like for example, like in your company, you might be having getting the laptops, right? All this laptop of Lenovo, Dell, HP, they all are generally on 3 years lease term, right? Do you have any idea like about your office laptops? They all are generally on lease from the company.
Yes, sir. Yes. Yes,
right?
sir.
So after 3 years, they will be replacing these laptops, and they will take those old laptop with them, and they sell it into the off market, right? So here, like residual value is one thing. If I would say like after 3 years, what is like fair market value of this laptop, in which generally I'm selling to you can say the scrap dealers, or maybe to the other buyers, right? If you see like in a place like Nehru Place, so there like there are a lot of vendor who buy this bulk laptop like from the corporate when they come off, right? So what amount they are expecting to receive. So there are again two things. One is, if the buyer themselves guaranteed that I will buy this after the 3 years at this particular price. For example, like $1,000 is of laptop price when they purchase, and they have given on rent, let's assume $50 a month, right? And after 3 years, they are ready to give it like at $100, right? And the buyer says like I'll buy at $100. So that $100 at which like the receiver is giving a surety is being like guaranteed residual value. Unguaranteed residual value is not over and above. It's altogether different. If the arrangement is like that, in which receiver is not giving any guarantee, but in the market, like this is generally the fair market value at which I can sell in future. So that is unguaranteed residual value. So we'll be understanding in detail, right? So that's about residual value, like the value at the end of the lease term for the respective asset, right? Generally, when you take car on a lease for 3 years, for example, you have taken a Cadillac. So like, let's assume like fair market price at the time of purchase was $50,000, and you have taken on lease for a period of 3 years, and you are paying, let's assume, $2,000 monthly rental. So over the period of 3 years, you have already paid $64,000, right? And then after the seller says like you can purchase this at a $5,000. So they are giving you a material right, because after 3 years, if you give it back, or if you want to buy the similar kind of car from the market, you will get at a rate of $10,000 to $12,000. But he is giving you at the $5,000, so you are getting a material right to purchase that, right? So that $5,000, which is like it's kind of a short return or a short price, is considered as a guaranteed residual value.
Sir, I have a question.
Mm-hmm.
सर इस केस में जैसे आपने बोला कि गारंटीड वैल्यू जो होती है बायर के पास ऑलरेडी मतलब लेनोवो इज सेलिंग टू अनदर कंपनी मतलब लीज पे दे रहा है अपना कंप्यूटर्स, ठीक है? तो उस केस में अब ये हुआ कि 3 साल बाद उसकी ऑलरेडी किसी और बायर से डिफरेंट बायर से एक बात हो रखी है कि ही विल बाय एट सर्टेन प्राइस, तो दैट इज अ गारंटी एक तरह से, करेक्ट? इसलिए हम उसको गारंटीड वैल्यू बोलते हैं.
दोनों से, either from you or from the other assured buyer.
हाँ, उस केस में लेनोवो जिसको सेल कर रहा है जो कंपनी है वो भी अगर बोल देती है कि मैं ही एब्जॉर्ब कर लूंगी आफ्टर 3 इयर्स, तो वो भी गारंटी में ही आ गया ऑब्वियसली, है ना? ठीक है, डन.
सर लेकिन एसेट में सर क्या उसका सर मतलब मेंटेनेंस कॉस्ट वगैरह और सर उसकी कंडीशन के हिसाब से भी तो सर डिपेंड करता है ना कि आफ्टर 3 इयर्स वो कैसी कंडीशन में हो.
हाँ, यस, वेरी राइट.
तो सर वो अनगारंटीड में नहीं आ जाएगा फिर वो, क्योंकि वो हमारी टर्म्स एंड कंडीशंस तो उसी में ही है.
No, I'm coming to that. So when like somebody give that, let's assume, like laptop might be small, you may not be in a position to correlate. Just assume like car. You have taken a car on a lease for a 3 year, right? How you use the car and how Rahul used the car and how Akash used the car is totally different, right? So there are certain parameters that has been clearly mentioned into the lease agreement that this should be the condition of the car and this should be like the miles on the car. Then this will be the pricing. So, like bad, good, very good, like depend on condition. So accordingly price has been agreed.
ओके ओके. तो सर ये पहले ही एग्रीमेंट में सर ये मेंशन होता है ना
Yes,
टर्म्स एंड कंडीशंस.
yeah, then only it is a guaranteed.
Okay.
Otherwise it's unguaranteed. Unguaranteed go in a fair market value on the date of sale.
Okay, got it.
Next concept will be understanding lease of lease residual value consideration. I think duplicate it. And then next is discount rate. So discount rate, again, time value of money, right? So we'll be doing a lot of present value calculation over here to calculate the right to use asset, lease liability. For that, all we need to do a present value. So for present value, we'll be considering the discount rate, right? Then one more concept we'll be understanding is initial indirect cost. I think initial direct cost. So when you are getting into a lease agreement, so initially if you are investing some amount, for example, legal document and lawyer fees, so how to consider those initial direct cost of the lease. So there are, if it is a finance lease or long-term lease, then you have an opportunity, you can amortize those costs over the lease term, right? The next concept we'll be understanding is the lease modification. Same way earlier in revenue recognition standard, we discuss about contract modification. Same way here also, there may be a possibility of lease modification. So initially it may be like operating lease, but there might be possibility that in future it convert into a finance lease. And same way, initially it may be possible a finance lease, but later on it can convert into an operating lease. So if any such modification happen, then how you need to do the accounting in the book of lessee or in the book of lessor, from finance lease to operating lease to finance lease, sales type lease to finance lease, or finance lease to operating lease, or vice versa. Those all concepts will be understanding in detail, right? Then last one is lease contract components. So what are the component of a lease contract? That also will be understanding. And most importantly, disclosure part, right? Any accounting standard codification, whenever you are studying, the most important part is the disclosure. So there you need to keep in mind both quantitative disclosure as well as qualitative disclosure. So we'll be understanding in detail both quantitative disclosure required under ASC 842 and the qualitative disclosure required under ASC 842. So this, like in detail, like this is the crux of the ASC 842, right? And we'll be understanding in detail one by one all the concepts for lease accounting and guidance. And after that, we'll jump into the lease, sales and leaseback transaction. And then lastly, some miscellaneous topic, which is contract combination, short-term lease, sublease, lease on easement, and the impact of lease on financial position, comprehensive income, and cash flow statement. Right? So this is what we're going to study in ASC 842. Any doubt? Looks good.
No, sir.